Thank you for watching the Wealth Guard Show. I'm your host, Tom White. Another volatile week on Wall Street, but stocks rallied toward the end. Was it enough to keep us going into next week? We'll take a look at that here in our economic mechanics. And if you watch our show every week, you won't know that our economic mechanics are based on these three key principles. First, the US dollar and the commodities move in the opposite direction. And second, commodities and interest rates, they move in the same direction. And last, high interest rates are bearish for stocks. Now what we do is we analyze these four components, and then we look at where the strengths are and where the weaknesses lie, and in understanding these key relationships, we look at the evidence and come to a conclusion to where the market is headed from there. And we begin first with the US dollar. And on the daily chart of the US dollar, down below 0.1, the stochastics are now trading sideways. We gave this one a yellow mark as they have no real clear direction. Clearly they have lost momentum though. And above that, the MACDs still look pretty good. The black line is still over the red, and the histogram bars have flattened out though, so we gave this one a yellow mark. And 0.3 above, the relative strength index is also flatlining here. It looks like this definitely run into some trouble with the US dollar. And on the weekly chart of the US dollar, down below point number 1, the stochastics is still bearish as the black line has crossed over the red and they're still in decline. Black line is moving in on the red a little bit though here, as we had some strength toward the end of the week. But the daily chart of the US dollar doesn't appear like it's going to have the strength to continue on and pull this one through for a higher grade. So we gave this one a red mark clearly. And above that, point number 2, MACDs, they're looking like they're losing a little bit of steam here, and the histogram bars have definitely flattened, so we gave this one a yellow mark. And 0.3 above, the relative strength index is having trouble with that 50 line, that white line. We gave this one a yellow mark too. And summing up the US dollar, we analyzed the daily chart and the weekly chart. On the daily chart, the stochastics, the MACDs, and the relative strength index were all neutral, and we gave them a yellow mark. On the weekly chart, the stochastics were negative, we gave them a red mark, but the MACDs and relative strength index were neutral, we gave those yellow marks. And for a total, we had 1 red mark, 5 yellow marks, and 0 green marks for the US dollar. And this is clearly in decline since last week. It was bullish last week, and now it's looking neutral and it's sinking a little bit. And now we take a look at the commodities represented by the CRB Index. And on the daily chart of the commodities, we can see an improvement here as down below point number 1. Those stochastics have bottomed in overbought territory, just like we discussed last week, and they've crossed. They're turning bullish, but we want to see them go across that 20 line, so for now we give them a yellow mark. And above that, point number 2, we see that the MACDs, they stopped falling, and now the black line's starting to settle in on the red, and the histogram bars are rising towards the 0 line, so we gave this one a yellow mark. And up top, relative strength index has bounced off nicely and it's moving higher, so we give this one a green mark. And a look at the weekly chart, we could still see some damage here. As point number 1, the stochastics is still negative. Black line crossed over the red, and they've not settled into oversold territory. We're going to need some strength in that daily chart to continue in order to pull this one through. So we gave this one a red mark. And above that, point number 2, the MACDs are still in decline, and so are the histogram bars. So we gave this one a red mark. And up top, point number 3, relative strength index, is no sign of recovery there, so we gave this one a red mark too. And so summing up the commodities, we analyzed daily chart and the weekly chart. On the daily chart, we found the stochastics and the MACDs were neutral, and we gave them a yellow mark. Relative strength index, though, was turning bullish. We like that, we gave it a green mark. Over on the weekly chart, though, things still did not improve. Stochastics, MACDs, and relative strength index were all negative, and we gave them a red mark. For a total, we had 3 red marks, 2 yellow marks, and 1 green mark for the commodities. Looks like we're in the right place as things are turning around on a daily chart, but it's going to need some really strong follow-through in the coming week here to start pulling those weeklies into bullish territory as well. And we look now at the 10-year Treasury yield. And on the daily chart of the 10-year Treasury yield, down below, point number 1, those stochastics are looking a little bullish here. We got the black line crossing over the red. Still in oversold territory, though, and we need to cross that 20 line, so for now we gave it a yellow mark. It's moving just like those commodities are, and we expect them to do the same thing. And point number 2 above that, the MACDs, they look like they're coming into a landing too, just like those commodities. The black line is settling, and histogram bars are moving up a little higher too, so we gave this one a yellow mark. And up top, point number 3, the relative strength index is still hovering around that 20 line here. Give this one a yellow mark. And on the weekly chart of the 10-year Treasury yield, down below, point 1, those stochastics are in oversold territory, and they're still negative as the black line failed to cross the red. Gave it a red mark. Above that, point number 2, we still have confirmation as the MACDs are still declining. Black line's moving lower, and histogram bars are dropping too, so we gave this one a red mark. Up top, point number 3, relative strength index is still trending lower, and it's also dropping lower in the past week, so we gave this one a red mark. And summing up 10-year Treasury yield, we analyzed daily chart and the weekly chart. On the daily chart, stochastics and MACDs, relative strength index were all neutral, and they're improving, we gave them a yellow mark. On the weekly chart, stochastics, MACD's relative strength index were all still negative and had a way to go. We gave those red marks. So we're split on this one. We had 3 red marks, 3 yellow marks, no green marks. But things are improving as it's looking like Treasuries could be going a little higher. But be warned that the Fed is fighting that, and they are purchasing these Treasuries, so they are keeping these rates artificially low. So it just looks like they're going higher with the commodities, though, in the shorter term. You can only fight it so long. And now we take a look at the Dow Jones Industrial Damage. And on the daily chart of the Dow Jones, down below, point number 1, those stochastics are in oversold territory, and they're trying to creep a little higher toward the 20 line. Gave this one a yellow mark. Above that, point number 2, those MACDs are trying to settle as the black line looks like it's taking a break, and histogram bars are moving up higher. We gave this one a yellow mark. Up top, relative strength index is trying to climb out of a hole, and we gave this one a yellow mark. Problem with this one that I see is that we don't have the volume on the upside here, so there's not a lot of interest at these levels driving these prices higher. It looks to me like what really just happened here is that the selling has subsided, and that's causing the buying to drive it just a little bit higher here. But be warned if volume starts kicking in again next week and volume starts declining, because this can get uglier real fast. And on the weekly chart, things are still looking bad as down below point number 1, those stochastics have still got a way to go to get to oversold territory, and we gave this one a red mark. Above that, point number 2, MACDs are still in decline, and so are the histogram bars, and we gave this one a red mark. And up top, relative strength index is still in decline. It's trending down, and it's also declined this past week, so we gave this one a red mark. Also to note too, look at the volume that we got down below there. We got some heavy volume to the downside this week, despite closing the end of the week higher. Makes me concerned and suspicious that that was a fake out, not a breakout. So we're going to watch this one closely as we go into the week. And on the Dow Jones Industrial Average, we analyzed daily chart and the weekly chart. On the daily chart, stochastics and MACDs and relative strength index were all oversold and starting to improve. We gave them yellow marks. We're on the weekly chart, things were still looking like they had a way to go as stochastics, MACDs, and relative strength index all came in negative, and we gave them red marks. And for a total, we got 3 red marks, 3 yellow marks, and 0 green marks. Looks like things may be improving here. We may have hit a bottom, but I just don't know yet, and we like to look further for closer evidence here to stack the deck in our favor. And right now, we need to see a little more improvement on the Dow Jones. We'd like to see some more volume as well. And so we've been coming up with scores with the US dollar, the commodities, 10-year Treasury yield, and the Dow Jones, understanding the key relationships we discussed earlier, and we were looking for the number of positives and weighing against the number of negatives and coming to a conclusion that way. That's where the strengths are and where the weaknesses lie. On the first place this week was the Commodities Index. We saw an improvement there. We had 1 green mark, 2 yellow marks, and 3 red marks. And coming in second place this week, we had the US dollar, which has fallen. It was in bullish territory last week, and it's dropping. We had 1 red mark, 5 yellow marks, and 0 green marks. And in last place was a tie between the 10-year Treasury yield and the Dow Jones. We had 3 red marks and 3 yellow marks with 0 green marks for each. And it looks to me like we're seeing a reversal here in the US dollar, and it's starting to decline, and the commodities are starting to make a break higher. And our market gauge. The object here is to be as far in the right column in bullish territory and as far away from the left column in bearish territory. And in first place this week, it's the Commodities CRB Index. It's moving into bullish territory here as it's starting to recover, being led by gold and silver, which is now starting to decline, but left the rest of the commodities behind. The US dollar is starting to decline too. It was very bullish last week and has now started to decline and looking could move into bearish territory soon. 10-year Treasury yield is starting to rise. It was in last place last week, and it's starting to move into neutral territory. The yield started to creep up toward the end of the week. And the Dow Jones Industrial Average came in last place as it was volatile, and it started coming back toward the end of the week, but still has a way to go before this one turns positive. We may be over and hit a bottom, but again, we like to see clear evidence before we make a move and recommend stocks. And keep an eye out too on the blog as things change here, as we're real close here to a breaking point and a reversal in the model where we could start seeing a turnaround with the commodities going higher and the US dollar dropping. And Dow Jones Industrial Average we're going to have to check on. This one may have hit a bottom once again, but we're not certain, so we have to wait another couple of days. We need to see some volume come into here, and I'll report about that on the blog as if we have another bullish day on the upside, or if things look bad again to the downside. I still have my target, 97.50. Or until evidence suggests otherwise. And we review now the IBD 50 portfolio. And our holdings going into this week, we're down to 3 as we've been eliminating stocks for the past couple of weeks, but we've been out of the market since July 27th when the economic mechanic model turned negative on us, and we checked out with a 14% gain on this one, and we've just been eliminating the worst performer each week. One of these stocks, the worst performer, is about to get eliminated. Let's see how we did. And our number 1 performer this week, coming in first place, it's Carbo Ceramics. And Carbo Ceramics, we had a gain this week, opening the week at $134.86, closing the week at $140.16. Had just under a 4% gain in this one this week, and a total dollar value would have been $74.20 had we been in the stock and not on the sidelines. Let's take a look at the chart. And on the chart of Carbo Ceramics, it's starting to look a little strong here, as down below point number 1, those stochastics are starting to reach up to the 20 line here. They were oversold. We gave this one a yellow mark. And above that, point 2, the MACDs are starting to rise, and the histogram bars are moving up higher. We gave this one a yellow mark. And up top, relative strength index hit a bottom, and it's clearly moving higher. We gave this one a green mark. Things may have been reversing here for Carbo Ceramics, as we're starting to see a little bit of strength here. And that only leaves room for one more stock in this portfolio. One of the stocks is going to remain, the other is going to get sold. The first stock up, it's Biogen. Biogen has been hovering in this portfolio for quite a while now, and it's been getting hit lately with everything else, and now it's up against Nu Skin. Nu Skin had earnings not long ago, and they performed well last week, battling it out for second place and survival in the portfolio. Coming in second place, and remaining in the portfolio, it's Nu Skin Enterprises. And opening the week at $39.29, closing the week at $39.54, a little better than a 0.5% gain, or $11.25 had we been in the stock. Let's take a look at the chart. And on the chart of Nu Skin, down below, point 1, those stochastics are looking bullish. Black line crossed over the red, they're reaching higher. We gave it a green mark. And above that, point number 2, we're looking like we're going to try to get some confirmation with those MACDs. Black lines moving in on the red. Histogram bars are approaching the 0 line. We gave this one a yellow mark. And up top, relative strength index, moving a little sideways still. So we gave this one a yellow mark too. So Biogen is out of here. And on Biogen, we opened the week at $93.18, closed the week at $90.98. A little more than 2.25% loss on this one had we held on, or $44. Let's take a look at the chart. And on the chart of Biogen down below, point number 1, those stochastics are in oversold territory, and like a lot of other things that we've been looking at here, they're trying to make a break for that 20 line. We gave this one a yellow mark, and above that too, these MACDs, they look similar too, as the black line's settling in and the histogram bars are rising. Gave this one a yellow mark. Up top, we turned bullish on the relative strength index. It looks a little stronger here as it's rising higher. We gave this one a green mark. May hit a bottom here in Biogen, but it did underperform, and it's now out of here. And our final results this week. We had Carbo Ceramics coming in first place with just under a 4% gain in the stock. New Skin Enterprises survived the portfolio and had just over a 0.5% gain in that one. Biogen is out of here with a 2.36% loss. And we got a total of $91.32 that we would have made had we been in stocks this week, or just about 0.75%. Things are looking like they're a little bit better out there right now, but wouldn't be so sure. And as every week, we get a new stock in the portfolio. Past few weeks, we've been going into cash, and we're going to do that once again here until the evidence proves otherwise. It is looking like we're getting toward a bottom right now, but again, in order to have the deck stacked in our favor, we want to make certain we get confirmation of these moves. We just don't have that at this time. So it may mean we miss a decent upside here, but at least we'll be riding that momentum higher, and we know for certain we'll be moving higher and not lower at that point. Always look for the evidence, stack the deck in your favor, and just look at the evidence. That's all you can do here. I think we have a good shot at still going lower next week if we get a little bit of selling. Stay tuned in the blog for that. Also, if you'd like to apply some of these strategies to your portfolio or learn how to pick the winning investments in your 401k, you can give a call, 303-818-7807. I'd be happy to spend some time with you teaching you some of these strategies. They're very beneficial to learn, and some of the strategies for the 401k definitely help you to pick winning funds in there, and definitely weak funds to stay away and avoid. Give a call, 303-818-7807 if you'd like to talk more about that. Tune in again next week and we'll do it again. Also check on the blog frequently as things change, and we're at a turning point right now in the market. But for now, I'm out of here.